What's up, guys? This is a recap of day 6 and day 7 of the $1,000 account challenge. I say account challenge facetiously because this is just my portfolio. This is what I'm working with. But day 6 was a green day and day 7 was a green day. Day 6 was like a 2-point-something% green day, 20-something dollars. And today was a 1.21% green day, $11.50. Nothing flashy, but I got the account back up to $957.74. So far this week has been a positive one in comparison to last week. I just like to analyze the trades that I took. Yesterday I took 2, and today I took 4. So I suppose let's just get into it, huh? I'm going to start off with yesterday's trades. Yesterday I took a couple of trades, and the first one was Tesla, which I took for a loss, and this is one that I regret having lost on. It's actually kind of a little bit of a bummer. Where did I? Oh, right here. No. There we go. So the first trade of the day was on Tesla, and this one could have been a W. It's a little bit frustrating. My risk reward on this setup was as such, and here was what I was looking for. On the 15-minute time frame, if you were to look at what Tesla was looking like, you got a tweezer bottoms. I was playing the tweezer bottoms on this. And the problem with the trade is that on this little knife down that we got, you got a really huge IV spike. And during this consolidation chop period, you got an IV crush, which unfortunately, put my contracts down a little bit because I ended up selling the contracts higher in price via commons or stock than when I bought in, but I still took a loss because IV kind of crushed down a little bit. But I bought in here on a tweezer bottoms, and my trade thesis was, all right, if we, crack underneath intraday lows or the tweezer bottoms, I'm going to get out, and I'm targeting first this resistance up here at about 348.50 or so. So it's a risk reward of 7.3. And I kind of chicken shitted out of this. I'm not going to lie. I saw that we cracked this, what looked like intraday rising support right here on this red candle right here. And I decided to get out the very next following candle. And I don't think I took a large loss on this. I think it was less than 10%, like 3, 4, 5, 6, somewhere in there in that neck of the woods. But if I stuck to my trade thesis, I could have made a decent penny off this. I could have been 2 for 2 on the day and maybe had like a 3, 4, 5% green day in the account because I actually took some decent size on that trade. I think it was a $250 trade. And unfortunately, I closed it for a small loss. I've done this to myself a couple of times where I have a nice trade thesis and I end up getting out before my trade's invalidated, and then it ends up working out, which is a little bit frustrating. So I'm going to pay attention to that. I'm going to take note. That way, moving forward, I can pull some value from that. But this was an unnecessary loss. I'm not saying I would have rode it all the way to the top because I don't think I would have. I think I probably would have gotten out on this rejection candle right here. But on a move like that, let's just take the price range on this breakout. You've got, a 1% move, and if I got out right at the close of this candle at 0.82, probably would have made 15, 20, 25% somewhere in that neck of the woods, which for a quick scalp definitely isn't bad. I mean, my target's always like 20% or so. That was an L. That kind of stunk. But my following trade after that was Hood, and this was a spectacular trade. And I did not let myself get out of this trade early because it took a while. I did not let myself get juked out of this because when I bought into it, it was a little bit choppy. And my trade thesis was as such. Long position, I bought calls. If we break beneath this little tweezer bottoms, which is what I base my risk on, you can see a little easier on the 15-minute time frame here. If we break this little tweezer bottoms, then I'm going to get out of my trade. And a 5-minute candle close is what I was playing. I'm targeting resistance up here at 65.10. And guess what? I waited the entire day, waited very patiently for it to crack up there, and it did. And it did. And I made like 20% on that trade. So this was a nice one. It took some time. I got off stream before I ended up exiting out of the position. But it just kept riding the uptrend here. That was a good sign to me. I said, all right, we're maintaining an uptrend. I'm going to stay in my trade. There's no reason for me to get out. It hasn't invalidated. And let's just see what happens. And the risk reward on this was 8. So made sense to stay in the trade. And it played out. I got out of half my position right here. It took 2 contracts. Hindsight, I wish I got out on this rejection candle instead of this one because I didn't get a great fill on the second one. It was somewhere in the middle of this red right here where I decided, I better get out. Because what I was looking for was some sort of cup and handle look where you can maybe get a breakout on that second contract. You got a cup right here, and I wanted to handle out. But unfortunately, I just didn't get that. And that was just sort of the summary of the trading day yesterday. I got out. And this is a change of behavior, mind you. Like, you should probably pay attention to the fact that you got a really gnarly knife down today. And I think that is probably influencing the price action that you're getting today. Like, this is 2 days in a row where you've had a change of behavior where bears are not just stepping in, but they're stepping in with heavy volume. So It wouldn't surprise me if you saw a little bit of a pull down, a little bit of a correction over the next week or so for stocks to cool off before the next leg up. But that summarized my 2 trades from yesterday. Now, if I would have done anything differently, I literally just would have waited until Tesla invalidated my trade before I got out. That's a bad habit I got to break. I got to stop getting out of trades before my original trade thesis is invalidated just because of a fear of loss. It takes money to make money. You have to risk money to make money, especially in the stock market. And my trade wasn't invalidated, so I should have just waited. It could have very easily been 2 for 2 on the day yesterday. And I'm not saying I would have cut all this, but I think at least up to here. And instead of taking a small loss, I could have made a small win. Hood, only thing that I would have done differently is I would have gotten out on this candle instead of this one. But you know what? We're not going to time the top. I'm not mad, losing out on 5, 10% or whatever it ended up being, getting out of the trade a little bit early. Today I start off with a TSLL trade. And I bought TSLL instead of Tesla because TSLL is the 2x leverage version of Tesla, and you can buy the contracts for cheaper than you can on Tesla. So I can buy closer to in the money, which just means that the strike price that I'm targeting is closer to the actual price that the stock is trading at currently today. So I did that. I bought TSLL. I think it was like 1 strike out the money on here. And what I was targeting intraday was this tweezer bottoms, and my risk was as such. I'm going to risk pre-market low essentially, or the bottom of this tweezer bottoms. I'm targeting up here at this rising resistance level. And on the 5-minute time frame, we ended up getting it. We got this touch of the falling trend line right here, right? And I didn't take profits because of the volume. We got a huge volume spike on this, so I thought we were going to get a breakout candle. I was very enthusiastically waiting for a breakout candle, and what I told myself and I told Stream as I was sitting there is, if you get any sort of hesitation at this resistance mark, I'm getting out of my position. If it looks strong, if it looks like it wants to break out, I'm going to hold and see what happens. And I held and I saw what happened. And this candle, if I switch over to the 1 minute, it so quickly flushed after it touched this. It looked like it was going to break out, and then 2 minutes later, I went from 10% green to 5% red. And, in hindsight, I wish that I would have taken my 10%. That would have been nice. I would have much rather gotten out for a win than a small loss because it was there. A small win was there. But I don't know that I would have. I'm going to be honest. I think this is just one of those situations where the market got me, where I got juked out because this is a strong candle, man. This is a breakout-looking candle on breakout-looking volume, and it just got faded very quick. It was just a tough candle, man, So that one is what it is. But I followed it up with a great trade, and this is probably my best trade since I started the small account here, the $1,000 account challenge, and it was Hood calls. And I actually bought pretty much the exact bottom. What I was looking at is, hey, we got a strong open, and the daily candle on Hood is amazing, or it was yesterday. This was the strongest setup that I had coming into today when I was looking at my watch list of 12 or 13 different stocks that I like to trade. This was the one that was my top long watch just because it looked the best out of all of the names. So this is one that I really wanted to target. What I saw was a hard push into resistance, followed by a very slow fade. So as it was slowly fading in the chat, I said, watch out for some sort of flag here, because if you can start flagging underneath resistance, I think you have a good opportunity for some calls here. And what did you get? You got a slow fade, pop up, and then a fade back down. And then once this hammered and you got this tweezer bottoms, I said, that's all I got to see. This is setting up a flag. I want to take a stab at the flag. And I bought on this candle right here, which was not quite the exact bottom. The next candle was the exact bottom, but I wicked back up and then just went to freaking Tendy Town. I made some good money on this. And the bummer is that I got out pretty early. If I held on to these contracts all the way up to the top, I would have easily made 100%. But I still made pretty solid profits on this. I got out here when I was up 13, 14, 15%. And I got out here, I had 2 contracts in total when I was out up about 28 or 29%. The reason that I got out is the beginning of this 5-minute candle started to wick down pretty aggressively, and I just did not want to get back any profits whatsoever. I just did not. I am in the mindset of see green, take green, do not let green trades turn red. I hate that feeling. That is the most frustrating feeling in the world, and that happened to me on Tesla earlier. I got this huge pop-up followed by a fade, so of course I'm cautious of it. I see this huge pop-up, and I'm not just going to say with certainty that we're going to break out, even if the chart looks strong, right? Even if you have this great-looking daily setup, I'm just not going to risk it, especially when things are starting to show signs of weakness. I want to take my money. Unfortunately, it just ended up popping up and kept on going. But nonetheless, this was a great trade. It was my highest percentage gain trade since I've started trading in this $1,000 account. I don't know how much. The only thing I really could have done differently is just ride it out, But I'm not going to regret taking profits on the position, even if I missed out on 70%. I still made money. Next trade after that was Meta, and I was playing another flag setup. This flag, you got a nice run up, flagged out, nice run up, and I saw another flag starting to form, and I thought, all right, it's just a flag day, man. You're getting flags all over the place. Let's play these flags. Let's try it out. And unfortunately, it did not play. I bought into the contracts here. I sold them out here. It invalidated the flag. I popped back into it, so I was like, maybe I got juked, but I didn't wait it out. I didn't get back in, I just let it kind of go. And I'm glad I did because it knifed hard as shit. Like, if I just sat in this trade and I had no plan whatsoever, I would have got smoked. And, Hood, here's a great example. Like, it worked out in this situation where, I risk essentially an invalidation of this flag. I target resistance. If it gets above resistance, I target intraday high. If it gets above intraday high, all the way up here, you've got room to. It's a resistance point from on the hourly way back here. I just didn't ride it out all the way. Like, I chicken shit it out. I wanted to make my money because I didn't know if that was going to happen, but I could have, and I would have been fine. But Meta was the same process, right? It was the same thought process. Invalidate the flag, get out, target, resistance all the way up here at 647.97. It just didn't work out, and I ended up taking like a 13% loss on this. There were weekly contracts. Maybe since I had profit on the day, I should have taken like an extra week just to protect my profits more. I did size down. Like, anytime I'm green on the day, I size down on all of my trades moving forward. That way there's absolutely no risk of me screwing myself. Like, it's just not something I'm interested in doing, is giving back money that I've already made. But unfortunately, I did. And I ended up, at this point, being green like $4 on the day. And I took one last trade, and this was it. And that's where I got done, was a Hood tweezer bottoms off of what looked like a pretty obvious level of support. I got in here. I didn't time the top one. I didn't time my exit super spectacular. What I thought was going to happen was, this looked a little bit like a cup, and I wanted the handle after that. We just didn't get the handle, and it knifed. And on the knife, I said, nope, protecting my profits. I got out for a tiny gain of like $7. I ended the day green $11. The most I was up today was like $20 or $25. In hindsight, I guess I could have stopped there, but 2% green is not like an area where I'm like, I need to make sure I protect this capital. Like, I'm not swinging for the fences every trade, but obviously I would like to make more than 2% a day on my portfolio. I'd like to have, some 3, 4, 5, 6% days, but hey, if all the market's giving me is 2%, 3% days, I'm going to take them, because over time, if I make 2% a day for 5 days straight, 2, my portfolio is going to be up a decent chunk, not crazy, but if you can do that every week, you're not doing bad. I'm not saying I'm going to average 2% a day for the entire year, but I'm just trying to get into the mindset of see green, take green, be quick, especially when I'm scalping. Like, in a swing trade situation, I don't mind sitting and watching things go and taking longer contract expirations and so on and so forth. But I think this move is really extended. I think you're getting close to a window of weakness where sellers are going to step in and get us a little bit of a correction. So I'm just being quick with it because I think this move is extended. I think bulls have really controlled the market for pretty much the last 6 weeks. And I think it's probably bear's turn to get a little bit of a pullback for a week or two. And then, you can be a little more risk on, if you want to say, size up in your positions, take longer expirations so you can hold them a little bit longer, so on and so forth. But that was pretty much it. It's not something crazy to write home about. I'm not bragging about being up 2% and 1% on the day, but I wasn't red. And that's better than last week. And all I am in the mindset of is 1% better. What can I do better than I did yesterday? Every single day is a learning opportunity. I'm going to keep showing up every single day and try to improve. That's pretty much all I got, man. I'm out of here. I've got to go watch Of Mice and Men with one of my buddies today. They're playing in Charlotte. I haven't gone to a concert in years, and I'm looking forward to it. So that's all I got. You'll take it easy. Later.